So look, we're still with the Aussie CAD open. So yeah, still, I'm still confident holding this one. It's been pushing down very smoothly, had a bit of a jump last night, but it's coming back down. Expecting this to continue. 2 out profitable targets, right? So Aussie CAD, we've still got open. Aussie Euro Dollar. Okay. So we still got Aussie Dollar shorts on. Now I still like this, like definitely like this down to these levels here still. I will point out though, so this little pullback we've had overnight for me in Australia anyway, it's nothing to stress about, right? If we actually just sort of mark that, you can see that we've come from this push down, this little flag break. All it's doing right now is getting that retest before the next potential push to the lower side. So what I like about this one is lower high, lower high, lower high, lower high. All right, so overall the market's pushing down. It's come back up to retest that trend line. That trend line also, so that retest also lines up with that little resistance level through that. So yeah, still going to continue to lower this one, right? Still continuing to hold this one. No reason to exit at all. It's just a small retest. This is forming a potential new trend, right? And if we look at how trends perform, you can obviously see you have deep pullbacks before they continue up. This one had a little bit of pullback before you next, you might get that sort of thing before we continue to the downside. But overall, our target is still at 70.2, and we'll continue holding that one. What are we also in? We are also in, that doesn't look bad. I might look at that. We're also in New Zealand Swiss, pound dollar, pound yen. So we're still continuing to hold this one as well. Now this one's a little bit in profit. I mean, I expect that tonight's candle will be the one that really pushes. So obviously this one, why are we in this one? As I went over yesterday's webinar, obviously price comes to a support level, but more so, nice little inverse head and shoulders. We had the break right through there. So it's definitely looking as if it wants to continue to the upside. On the 4 hour, back above the 200 EMA, which is a really good sign as well. So yeah, no take profits on this one. It's just more so a matter of let it run and see what happens. We're also in New Zealand yen, which is, I believe, pulling back a little bit. Yeah, so we took this one as well. So down support, nice triple bottom right here, or a bit of a slight inverse head and shoulders as well. We had this big push through here. I'm still confident holding this one all the way up into here. This is looking really good. Slight pullback during the Asia session, right? So Asia session has had a bit of a pullback into this support level. So if you're not long, it's a potential area to look at buying it. I'm not scaling it. I don't scale into trades, but that is your potential area to look at buying this one at this level, right? So you could definitely look at buying it here for the next push into these levels here, right? Quickly go over these current open positions. Oil also is one that we took. Very basically push into support, nice big rejection. That was the big one that got me into the market. On the 4 hour, what we can see, this is why this a good point here. I'll show you why I don't like to actively watch trades as well. So you can see, so we entered basically on this open day here. The first day the market pushed all the way up, right? So the first day we're in profit. Now, what I like about this particular candle right here is I like the fact that we have this massive wick to the downside. If you guys have done my trading videos over at Global Institute of Trading, you'll see how I talk about the wicks to the downside, body closes to the upside. Very, very important part of my trading. Go away, someone calling from California. Very important part of my trading. And I expect this to continue up with ease, pretty much. But one thing why I tell people not to watch these is because had you been watching this, you probably would have panicked and gone out of that trade, closed it, something like that, because you saw a big bearish engulfer on the 4 hour, which is not very relevant right now. And then you might have closed it and you felt good. Oh, cool. Potentially missed that. Lost, but then it comes up and you're like, damn it, should have kept it open, right? Which is also, inverse head and shoulders there. So yeah, it's one thing why I don't like to actively sort of watch my trades as well. And then the last one we are in is gold. So we got a few open positions at the moment. So we got 1, 2, 3, 4, 5, 6 open trades at the moment. Now, I know usually I only do 5 open trades at a time. That's on my main trading account. That's on my main portfolio. This one's a webinar one, so I don't really care. I will open more on this one. It's just a webinar one. But yeah, so we have those 6 trades open right now. This one was great. I did post an article on this one on my website of why I took this. Basically, big support, big sell-off in price, nice little rejection. Took it based on that. And then I didn't go to the 4 hour for this entry, but you can see that the nice push on the 4 hour through there. This shows very good signs of pushing up based on price action, big support. Right. This is more so based on the weekly. I don't trade the weekly actively, but I feel like the weekly is going to really kick in here and really push up. So yeah, I decided to take that trade to the upside. I know the daily is under the 200 EMA, right? But as I said, like for gold, I'm definitely looking for this to continue. I would not be surprised to see gold back up into 2000s. So this is more so a big weekly sort of, it's a weekly play more so than anything. So that's for the trades we're currently in. Yeah, they're the trades currently in. All right, so basically what I want to talk about right now is I want to talk about trend following. Okay, let me do something now, whiteboard. All right, can you guys see like this whiteboard type thing? Can you let me know if it's just a big white blank screen you're seeing, and that's all you're seeing. I don't know if I've shared it correctly. Yes. Okay, cool. All right. So basically talking about trend following, right? Everyone knows you've got different styles of trading and whatnot. Okay. So lots of ways to trade. Personally, for me, I've found what's made me profitable, what's made me very successful in trading careers and all sorts of stuff is the long-term trend following approach. Now, this is adapted by many successful traders, not just myself, but many successful traders, famous ones as well. The idea of trend following, though, is it's tough for a lot of traders because a lot of the time your account may be in drawdown, even though the equity is there building your account. So what I mean by that is, right, let's say we span this over the 12 months. Okay, so let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right, so let's say this is our months right here. Now, as a trend follower, right, the idea is where, let's say you start with 10,000, okay? And let's say out of these 12 months, you take, a number of trades. So when we're talking about trend following, we're talking about, as you guys see, what I do is capture long-term trends, just hold on to them, let the equity build up. I call it the snowball effect. Let the snowball effect build up, equity grows, right? Your account might be down. So let's say January, right? You make let's say a 1.3% gain. Not very exciting, okay? And then let's say January, February, you lose 0.10%, okay? So you're negative 0.10%. And let's say February, you make a 4.38% gain, okay? Very good gain, okay? Now, the idea here is where in January and February, most likely is what you see when you see a trend followers. So if you guys go see my FX book, the one that I've made for this account, you'll see that a lot of, right now, it's the account's in drawdown, but the equity's above. So if I was to close my trades now, the account would excel, if you know what I mean. And this is the idea about trend following. This is the idea that a lot of traders find it hard to adapt. And I found it hard to adapt to this as well when I first started. But when I actually adapted to it, I found it was extremely profitable. So January, February might be a little bit down or a little bit gain, that sort of stuff, or even break even. And then February rolls around, you make a nice big gain right there, okay? Because the trades you've had been held in here and here, you now closed it right there. So in February, bam, all that equity closes, your trades come into profit, right? Then let's say January, February, March, let's say you make a 1.2% gain. And then February, let's just say you'll break even. And then January, February, March, let's say March is another I don't even know, let's say 8% gain is what it looks like, right? Because let's say you're holding multiple trades and then you close and you make that 8% gain, okay? And then the following month is, let's say you only do a 3%, right? Had another good month, right? So, and then all of a sudden you have another break even and then maybe slightly negative 1%. But then the next 3 months, let's say, 4, 5, and 3. That is basically how trend following works, right? When you look at it on a portfolio. And the reason being is, again, when you're following those trends, right, you're taking entries, you're quick to take a loss, right? So you'll hit your stop loss, you're out of the trade. But in the time that you're actually looking for trades, so in the time while this equity curve is still growing, okay, you actually you're taking small losses while holding the equity. And what I mean by that is, so let's say you start with 10,000, right? And let's say by January, February, your account's at, I don't know, say 5,000, right? This is just an example. So technically these 2 months your account to drawdown, but then you close in those trades in February, January, March. Now your account's at, I don't even know, let's just say 10,500, right? So you made a gain, right? And you feel like, this is nice, or however much you made, or whatever percentage it was, right? And then let's say it stays at that, and then let's say it goes back into a little bit of a drawdown. So now you're at 10,300 instead of 10,500, and then it's like that for the next 2 months, and then all of a sudden all that equity in the trades you're holding open closes, and now your account jumps up to 11,000. You know what I mean? So all the time where that's what an equity curve is. That's why how the equity curves look like that, right? That is how trend following works. So when you go look at my portfolio, you'll see that. You'll see the months that are negative, little slow months here and there, but then all of a sudden, if you watch it over a whole year, you're going to see like 8% gain here, 6% gain here, -1 or -2, or slight break even, and then all of a sudden bigger. But that's because I've been holding the equity, right? So these trades that I have open at the moment, I'm showing the wrong screen. The trades that I have open at the moment are the ones that will close and propel the account. So with trend following, you may start with a 10, right? You may go down to 9.5, right? Then up to 10.5, right? And then down to 10.2, and then all of a sudden big winners, you close the equity, you're up at 11, right? And then again, you're down to 10.8, and then all of a sudden big winners again, you're up at 11.5, you know what I mean? But it's consistent, right? So the problem where a lot of traders like you guys and new traders and new people and that sort of stuff is distance yourself from the P&L. Don't pay attention to your P&L. I pay very little attention to my P&L. I don't look at my P&L on a daily basis or on a weekly basis. I look at over a quarter. I go, what's I done over a quarter? Because that's what matters to me the most. It doesn't matter each day or each week, because I could have a losing week. I could have 2 losing weeks in a row. But I know each year, sticking to this, that those big profits are going to run from the equity that I'm holding. That is trend following. And as crappy as it sounds, so as most traders go, well, I don't want to do that. Right? I want to make money each month, that sort of stuff. As great as it sounds, trust me, I've been doing this for a very long time. It's extremely hard to be making a profit every single month, right? Most professionals, what I see, I'm not saying every single one, but most professionals what I see, this is what their accounts look like, right? In terms of how we're looking at it here, right? A few months that make the profit, and a couple break even small months, and a few months that make the profit. Overall, as long as you get that, however much gain, 30%, 40%, 20%, whatever you're aiming for, everyone has a personal preference. But the part where a lot of people struggle with it is being able to be comfortable with your account in drawdown while holding equity. Like I said, you might start with 10, you're down at 9.5, you see trades running, right? You're now, if you close those trades now, your account will be back at 10. You're like, oh, I just want to do that. I just want to close trades, get my account back up to 10. But the problem there is you're not going to hold enough trades. You're not going to hold enough equity to be able to push your account up to 11, up to 12, up to 13, 14, 15,000, that sort of stuff, right? So you have to be able to hold those trades as a trend follower, as hard as it is at times. So these trades that I have open at the moment, if I was to close them all, it's going to push my account pretty fair bit. How are Google's doing it? Because a lot of people distract their trading and think they're bad because they see Google's. Because those guys aren't really doing that. Trust me, they are not doing that. This is the problem as well. Is a lot of those guys are with shitty and dodgy brokers that either that or a lot of them, actually what you see is, I'm not going to name names, but they have their own broker where they can actually forge it to make them look like they're making that percentage gain, right? If you're with a legit broker, you can't forge it. That's why I always say, make sure you double check what broker they're with, right? In Australia, if you're with Pepperstone or Fusion Markets or whatever it is, they're legit brokers. They're also in the UK and that sort of stuff. I don't trade with leverage at all, John. But yeah, just make sure you check with what broker they're with, because like I said, a lot of them just start their own offshore crappy little broker and they manipulate themselves, right? They make them their portfolio. And that's why you have to be with a legit broker. But anyone who says they're making 100% a month or 50% a month, yeah, don't believe that. IC market's legit. Yeah, IC market's legit. Yeah, but just really be careful with what broker. Yeah. I always say, you know, there's I don't want to name names here, but you know, if they're, you know, flashing that they're making 100% a month or 30 grand a day, I've seen ones that say they're making 100%. I've seen one guy, he says he has a 100% win rate and he makes 100% a month, and people believe him. People buy his course. Do the math. He would be the richest man in the world off 25 trades, starting with $50. So yeah, I don't know enough about BD Swiss, honestly. I can't say what they're like as a broker. I've never used them myself. I was doing a one-on-one with someone today who does use BD Swiss. I don't know enough about myself. But if you're in Australia or the UK, or unfortunately anywhere but America, I always suggest either Fusion Markets or Pepperstone. They're the two most legit brokers I know. IC Markets is also legit. I've never really used IC Markets to be able to give you a personal preference on them. But yeah, so hopefully this guys opens you up to a little bit more on I don't know why I'm holding business card. Insight of what it's like to trend trade, all right? And it is extremely profitable. Actually, some of the most successful traders, like I said, if you guys go look up Jerry Parker is one of the original turtle traders. He has his own investment company called Chesapeake Capital, and he's very much the same. I don't know his exact trading system. I'm not saying it's the same as mine, but listening to his podcast, it sounds very similar to mine. Long-term trend following, the same sort of scenarios where you got these, you know, small little margin spot, and then, you know, hold on to that big winners and the equity and that sort of stuff. So, hi Joe, there are brokers who also 70 to 80% a month, but due to the fact they leverage very heavily, there are brokers that say that they make 70 to 80%. I'm not sure what broker you mean. Do you mean traders? Yeah, leverage. I mean, that's another thing is you got to look at. Yeah, traders. That's another thing you got to look at. If someone, another thing, what they do as well is they will have two accounts, right? They might start with one account with $1,000, the other account with $1,000. They'll take a short on euro dollar, a long on euro dollar, whichever one's extremely profitable. They'll take a screenshot of that and post that to you guys. And they'll always leverage it to make it look like they've seen so much big percentage gains. That's what they do, right? Two screenshots. I'll go long, go short on one other one, and then take a screenshot of the winning one. That's the biggest thing they do. What impresses me is people who can make good money trading by, you know, just sticking to the same rules and not leveraging. And that's the leverage is, to me, I don't like leverage. I've never used leverage myself. It is an old trick, you know, and that's what a lot of people do. And the same old question is, show me a verified track record. It's like, I don't have to show you anything. That is the red flag, right? So yeah, it is the oldest trick in the book. But anyway, getting back to this, I don't want to talk about negative people. The main thing I want to talk about today was that I wanted to talk about understanding equity curves, understanding the long-term longevity of the trend following in itself is like that, right? And overall, what matters is each quarter, each half yearly, and each year, right? So if you come out each year profitable, that's the main thing. right? It's not about making money every day, every week, even every month. But the hardest part is sort of switching off from the P&L part. Understand that you don't have to track that P&L every single day. And if you do, it's probably not the best thing to do. Don't track your P&L. Just track it every quarter, as I do. Like I don't really go look at my trade statements each week or each day. I just go back every quarter and go, do we have a percentage? Did I sort of make my goal that I'm trying to aim for each quarter? That's the main thing. If I do, great. If I have two months that are negative and 1 month that is profitable, that one profitable month is all the equity that I've been carrying around from the 2 negative months, for instance, like this, then that's what matters to me, right? Now, during this time of January and February, I may be holding trades, the equity that is profitable, the account's negative. January, February, March is the time when it might not be March, it can be whenever, it can be January, February, March, April, whatever. I'm just using this example, but the time when I close a trade is that quarter profitable, and that's what matters the most to me. So yeah, look, hopefully that gives you a bit more of an insight on actual trend following and what it's like. And you'll hear, if you actually listen to enough interviews and podcasts and whatnot, you'll hear great traders like even Warren Buffett. People are like, oh, Warren Buffett's the greatest, richest man in the world, but now at one point, best investor. Even he talks about big drawdowns he's had. He's talked about he's had a 50% drawdown in 1 year before. Markets dropped 50%, he's still holding his portfolio. What's that do? Same thing. Each month might be down, 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 but the overall equity is up here. So that's the main thing, right? Does that, guys, give you a bit more of an insight, especially on my style of trading, right? My style. So as you can see from the trades that I've got open, my equity's up, my account's up, but the account's a little bit in drawdown. So if I close it, if I hold those trades long enough, it's going to make about the trades that I've got open now. I think it was at 3.6 thousand. If I hold all those trades to take profit, it's going to be close to about 15 profit. And that's what matters to me, those. I might lose, because each trade I'm risking 15. I might lose, a few of those along the way. And then the overall profit, because of the losses, may drop down to about 10, right? Because the losses have held. And that's really, how it works. And, and then all of a sudden I close my account, it's now at 160. And then I do it all again. So I might be holding equity. My equity might be at 165, but my account is at 155. That's supposed to be a 5. 155, because I've taken losses along the way while holding the equity. Close those trades. Now my account might be up at 170, right? Exactly, Jay. Business is expensive. That's what I tell everyone. It's exactly the same as running a business. And if you treat it like a business, it's going to grow like a business. It's going to grow like a company. If you treat it like it's a day at the beach on your little laptop and sitting on mojitos and trading, it's not going to get anywhere. It's as simple as that. John, is there a reason your bulls went gold considering NFP numbers were good this month and it's high probable that they will be good next month too, even if it looks like it's not a good time frame? No, I just go back to chart. The chart's telling me. I don't trade by NFP numbers. That stuff doesn't bother me. I look at more so just the chart. Technical trader, very, very systematic trend follower I am. But yeah, very systematic trend follower. That's all I do. I don't trade the news, that sort of stuff. I keep up with global economic news and that sort of stuff, but I don't let it influence my trading decision. If I see it on chart that there's a trade there, I'm going to take the trade, regardless of what the news says. By doing that, I've had some extremely great trades. By doing that, I've also had losses. But overall, I felt that over the last few years, it's served me better to just trade that systematic approach and forget about what every day is happening in the NFP and the PMI and all sorts of stuff. So yeah, what's your trade stop loss strategy? Feels like I'm moving my stop loss early and keep getting stopped out using movement. Yeah, so I don't do it too early because market's volatile, right? So a good rule that I sort of say is, let's say we have a little market and, let's say we have a breakout and we buy here. Let's say we buy on that retest, the trend's up, all right, market goes up, puts in this higher low, then goes up. I might at this point now move to break even, but I'm not trailing it yet. I will trail it when the second higher low is made. Now I'll trail from break even under that low. And then when another high low is made, I'll move it from that one. Another high low, move it to that one. Another high low, move it to that one. You always want to stay one lower high under the other, or higher low, or whatever, under the other one. So you don't want to sort of move it straight under the one. What market are you looking at? Yes, but on the 4 hour, there is a higher low on the day. All right, so yeah, so trade it based on the time frame you took the trade on. If you took the trade on the daily, you do it on the daily. If you took the trade on the 4 hour, do it on the 4 hour. That's the easiest way to remember it. Yeah, is that. So that's what I do when I do trail it. But I'm not very quick to trail my stops either. Yeah, I'm not very quick. I'm not quick to set my stop loss to break even either. I don't like setting my stop loss to break even too quick, because in the past, I've done it where I'll sort of, take the trade and set my stop loss to break even. It'll come down and then go up, and then I'm like, damn it, shouldn't have done that. Are you still holding the wait? Are you the J that's in my group, by the way? Jay from Sydney, different Jay from Sydney, yeah. Sorry, there's a few J's that come on, and right now your name is different than usual, so I wasn't sure. Are you still holding the Aussie dollar trade from January, February, March, April, May, June? From the June? Okay, fair enough. Oh, you made profit then? Stop trailing stop loss, I'm guessing. Yes, timing. Okay. That's cool. Let's go look at that trade. Where is it? Aussie dollar. Oh wait, sorry, I'm sharing the wrong screen here. All right, so Aussie dollar. So basically, where did you trail your stops? So the entry was there. Market comes down, comes down, comes down. I'm guessing it was around here. Okay. So just sorry, I have a couple of questions here. John, would you take multiple positions at a different level on a trade if the market is moving in your favor or by a certain level? You mean like scaling in? Is that what you mean? No, I don't scale into trades at all. That's kind of like I don't trail in at all. Like I very, very, very rarely will I ever trail in. The reason being is I've done it in the past and I've taken double or triple the loss. I've also done it where I've taken double, triple the win. Overall, I just don't like it because, for instance, let's say, let's just say use this example. Let's say I sell here, right? And then the market goes in my favor. And then, I know, let's say I sell, I don't do this, but on the break of that, and then I move this stop loss to there and trail that, and now I've got the stop loss there, and then all of a sudden this happens. The problem that now is I've taken a very small loss. Sorry, I've taken a small loss, but I've also taken a very small win. Now it's kind of swinging me out at break even. Whereas if I was to take this and then, like I wouldn't trail it there, but let's just use an example. If I trail it there, then I take a bit more of a bigger win than would I have if I scaled in. I just don't like scaling in. I've just never found any use for it myself. That's the only way to explain it. Some people like it. Some people do well with it. I don't like it. I've had bad experiences with it. So yeah. Yeah, it's personal preference. That's all I can say. It's personal preference. Cool. All right. Well, I've been blabbing on for 30 minutes now. We might call that. I've got to. Yeah, we'll call that. Hopefully that gives you a little bit more of an insight onto the whole trend following the equity curve and the months and that sort of stuff. So we'll go from there. Euro New Zealand. I'll just quickly go over Euro New Zealand. Just one market, Euro New Zealand. Yeah, not much really. I'm not a fan of this price action. Like Price is under the 200 EMA, so I have to sell it. It's my trading system saying I have to sell it, but it's at a big support. Really not much on Euro New Zealand for me. It's very, very messy price action. My trading system has zero opportunity there. So that's all I can say. I can't give you I can't give you a trade on this or a potential trade because it doesn't line up with my trading system. And if I was to give you one, then I'd be contradicting myself and everything I say. So yeah, no trade. All right, guys. John, yeah, I love the gold one. Definitely watching that one. And we'll see how it goes. All right, guys, we'll call it there. Take care. We'll see you tomorrow's webinar. Cheers, guys.